So good afternoon. Yeah. I guess it's been session has been it's humbling. It's humbling. Session has been very humbling with the Mr. Wedili coming in too. That's been interesting. Okay, one thing I didn't tell you when we were starting, I remember that committee, so it's some. Okay, so you know. How did you know that? Oh, you were told, okay.
I'll direct our question to you.
No, it's okay. I'm sure most of what I said, he said most of what I've said is yes. So we are in sync. So section 2 now is to practical compliance and strategies. So one thing about that, we used to be on, Taiwo has been a practitioner, we used to be on the opposite side. We've known for a while. So we argued about rules, about tax planning, about the rest. And there's one person that has even won a case in court before. And when it was time for amending the law, and the law had showed us and see, this is a loophole in the law. I went to court and I won, but I don't believe it's supposed to be. I don't believe it's correct. It's not done anywhere wrong. Let's amend that law. So it was very patriotic to call for that. So it's one thing that I have done for this tax reform. And decided to use them pro bono. So implement practical system for tax record keeping and documentation. You know, we've been talking about record keeping documentation since the proof. The only way you can prove, because tax is about your financials, and the only way you can prove this is your document. We also said we practice for law cases compliance. And the only thing you want to tell me is I have to show me the proof of all and through your documents. So we have to develop internal compliance calendars and controls, leverage technology and professional support for tax compliance, and apply best practice to ensure timely and accurate tax filing. So I'll be so this is section provisions for returns under Chapter 2, Part 1 of the Nigerian Tax Administration Act. We have 23 requirements for returns in that law. So we have income tax returns for companies. So as a company, you have to file income tax returns. We have estimated income tax returns for companies engaged in liquefied natural gas. So the ones in NLNG, you file an estimated returns, and you now file your actual later. So under the petroleum upstream and liquid gas, you are expected to file monthly estimated tax returns, unlike other companies that file once a year. This one's filed monthly. And at the end of that, you file 13 times, not just. So the 13th one is where they believe that you must have captured all your income all through the year and file the actual one. Income tax returns for individuals. An individual, you are all expected to file tax returns. And some people think this is a new provision in the law. It has been in our law since. How many of us filed tax return last year? As an individual. I did. You did. Who else did? Nobody. You were applying for tax clearance, yeah? Right?
Not really, because of self-assessment. Since I'm not a paid employment, and in only Lagos State, you want to place.
You were compelled to do so. So the people in the employment, nobody files tax returns. But it is actually, you can be charged. Okay.
You know, up until now, when we are doing formal proper training, many of us need to
You didn't know. So the ignorance of the law is quite
Tell that the stuff that it's just
So section 13, section 24 of the Nigerian Constitution states, and I quote, it shall be the duty of every citizen to truthfully declare their income and pay their taxes to the relevant agent of government. That's what the Constitution states. What it means is that every one of us will declare, that is return filing, and pay taxes. So that's the basis for every tax provision in the law: declaration of income and filing of accurate returns. So the law already provides that every one of us, whether we are in paid employment or self-assessment, we need to file our returns. And what does it? Your companies only have the obligation to deduct your money. So it's like withholding tax that you do. Maybe it's also a form of withholding tax. It's called deduction as source. So you take that from your money and pay to government. Why? It's because they know that if they leave you to come, you may not come at the end of the day. Okay, government now says if somebody is paying you, you should deduct a part of it. And as this for self-assessment too, for those who do, when they do a contract, the law also says they should deduct part of that contract as withholding tax. But that does not now preclude you or exempt you from you performing your obligation of filing your own returns, because they might not have deducted enough taxes, or your employer might have only deducted taxes that he knows about. You might have earned other income. So you are expected to now declare those other income too and pay the tax on them. So that's why you need to also, so they say it's an offense not to file your returns.
So, sorry, I have two questions.
Okay.
One has to do with
I don't know what's the committee to make this filing easy for individuals in terms of having a site they can have to have them.
Every so what we advocate is that every state IRS you go digital, and most of them are gone digital. Most of them are gone digital. Some have apps on their phone, and their apps that you can log on and do the filing. Yes, yeah. But you know, you must have also kept your own records.
yes.
Be able to do that. So for you to upload, that means you have to upload your income on those apps.
Because as tech savvy Lagos State was,
No, the file are you doing manual?
I had to go through I would just require just a friend to help me do the
Is it that you don't know how to do, or because Lagos have been doing?
Is it because the populace are not really, if I as this level does not even know that such exists, then you will not talk about people that are.
The first thing is that I'm not saying you are wrong. The first thing is that people are not interested in that.
Yes, I mean.
So they don't want to know. So they believe when they know is when they be bothered about it.
Yeah.
So, but where the thing is, I will say that we should just deal with people. Because that's issue. Everybody will realize that. You know that, every fact. In fact, that's the biggest, most of these celebrities are not. The biggest offense you always see is tax. Is the two things, it's either tax or sexual activities.
Yeah, beside it.
Those are the two offenses you always fight them with, and the biggest one is tax.
Yeah.
I think Wesley Snipes is still in prison now. For tax evasion. Yes, I have been there for I think it was 5 years now. It's 7 years ago, yeah, for tax evasion. Ronaldo almost went to prison now. In fact, I think Ronaldo was in Saudi Arabia somewhere. He went to earn more income somewhere. And said he did not declare it. I almost went to prison. So these are, I think 1 or 2 persons should be jailed. everybody, but they don't take it serious. But now we said it should be digital. We even say they could make apps.
The second question, we were looking at that A calculator yesterday. I raised this issue because if I'm in employment and I have side hustle, sometimes some of the employee would don't want their employer to know that they have side hustle. So I think there's supposed to be a delineation of the payee payments and returns and the side hustles.
There is now, there is. That's why they say you yourself are supposed to file your returns at the end of the year. Your employer is calculating it so, and it's remitting the tax based on your salary, the money he is paying you. Now, at the end of the year, you have up to 31st of March to go and file your own return. So when you are filing, you recalculate your tax. So you take everything your employer has paid you. Let's say you earn about 50 million from your employer, or let's say you earn 10 million. Your side also has also brought 5 million. You know your employer has calculated tax of 10 million. So you add 5 million to that 10 million and recalculate the tax. Now you recompute the tax, you get a certain amount of tax. You deduct whatever your employer has paid on your behalf from it. You know you have a balance. So when you're filing your returns, you file the returns on the 15 million. So you now provide evidence of payment of on that 10 million. So you pay the tax on the balance of 5 million. So that is it. So that one concerns nothing, you don't need to tell your employer. Because the obligation is you yourself. So then pay as you earn returns, which is done by companies. Because they too, they pay taxes, they pay every month, they don't file returns.
Yes, it's just
So the monthly one is payment. So they too, the employer also have by January to also file the returns of all the payment that has been made. So simplified annual income tax returns. This is what you asked about for small businesses.
yes.
They have simplified annual tax returns that they will file, not audited statements. Then estimated returns for upstream
So
processors.
if it is a registered legal entity, it won't go to state, into NRS.
Legal,
If it's a limited liability company,
yes, I go
it goes to
to
NRS. So that he has to use the old transformers if it's not the new one.
yes, you have to use the NRS system, whatever the system NRS
That is
is.
coming to.
The same system that the big company will use, the same thing you use. It's just that you classify as a small company. And you know it's only return you file, you will not pay, you pay tax as 100%.
Yes.
So there's something about, so we're using the nomenclature about small companies are exempted.
Yes.
Small companies are not exempted.
Yes. They're supposed to
They are to be charged at 0%. So because there's difference between exemptions.
So it's zero rated. They are zero rated.
They are charged at 0 rate. So there's difference. Which one do you think favors small companies? They're exempted or 0 rate?
Exempted.
Oh,
Something.
that is not true. 0 rate is relevant to them. Before they were exempt, when the threshold was 25 million, they were exempt from income tax. But now it's 0 rate. And let me tell you, we have accountants in the room.
Yes.
So the law says that so if you make an income, if that income is exempt from tax, you can't claim an expense that are associated to that income.
Correct.
So if you as a company, you are exempt.
Okay.
All your expenses,
Are not
you can't claim them. And that goes also for, and you will not say because I be exempt, so why does it need to claim expense? Because after all, if you claim itself, you will not
There's no
need,
basis for.
but there is. You claim capital allowance, right? If not, by the time you become a big company, you can't, your You can't payment capital allowance. It should just be taken as used. So there are some benefits by being separated and being exempt. Also, for VAT purpose too, there's also a difference. For VAT purpose, if you are exempt, if your goods is exempt, it's gone. So if it's separated, you can claim your input VAT. So that's the difference. Okay, also estimate, actual returns for upstream, monthly returns for petroleum royalty. So royalty too, this royalty used to be collected by the NUPRC, now the NRS will be collecting. The monthly returns for mineral royalty, then we have monthly returns for non-residents in shipping and airline companies. Also returns for value-added tax, which is also monthly. Value-added tax fiscalization system, also you need to deploy. Returns for surcharge, this has not been yet done. Then returns for virtual asset service providers, as those dealing in digital assets, the currencies, and the rest. Returns for priority companies. You know company that they call priority company? Have you heard of pioneer status?
Yeah, that's one, yeah.
Okay, we should have pioneer status. And what is pioneer? From the word, it means that first, right?
Yes.
New, right? But we had many companies under the pioneer status that were not first. They were still granting pioneer status to hotels. They were still granting pioneer status to many, I think even this organization had pioneer status. This building, I think they also have. So many that were not pioneer were getting it. But that's not your problem. If it's so what the law now says is that rather than call it pioneer, why don't you call it priority? Government feels they want to prioritize that sector. That's why they grant such a setting. So let's declare that sector as rather priority. Because hotel business today is no longer priority. Doing hotel business, yes. And so some other things. So it's now changed to priority sector. Then also it used to grant a blanket tax holiday. If you are given tax holiday and you are making loss, is there any benefit to that? There's no benefit. You have loss already. So what you wouldn't have so what now do is to give you tax credit. So if you invest, you get 5% of your investment as tax credit. So even if you are making loss today, tomorrow, you have about 5 years to claim that tax credit. The day you break even, claim your credit. So it's also government does not have incentives just there for people to plan with or not plan with, but it stimulates investment. Like we said, somebody will invest before he gets the credit. So it encourages people to also invest. They know that, okay, as I'm investing, I'm getting credit to offset my tax debts. Tax incentive returns, I spoke about that earlier. Returns for deduction at source, this withholding tax returns. Information to be delivered by bankers and others. This is the one bankers are supposed to be providing information on bank balances on quarterly basis and other financial this. And this information, all these laws have been in the law before. They were not new. Before, it used to be even 5 million for companies and 1 million for individuals. But now it's 5 million for individuals, 25 million. No, is it 5 million for individuals? Yes, and 25 million for companies. So then disclosure of tax planning. No, it's 25 million for individual now and 100 million for companies. So it's even increasing it. Disclosure of tax planning
Is cumulative per month.
Yeah, it's of course cumulative. It's even quarter, not books of account, returns deemed to be furnished by an authorized person.
What do you mean by book of account?
All your books of account.
How do I do returns on book of account? Just ask.
No, you should keep books
Okay,
of
okay.
account, that is keeping books of account. I know.
Oh, so that's.
Then again, for that sake, when you're filing your returns, of course, read your audited financial statements. It's from your book of accounts now that you get your audited financial.
No, sir, you have all these small.
And also, I can call for your books of accounts.
Yes.
As it-
For review.
So for review, these are part of this.
There are some in the informal sector, in the SME. We know the issue of governance is a serious challenge. Some, you said,
They don't have
that
books.
they don't have books.
So there are other ways, so when you call it informal, nobody checks their books. So they have another tax regime called the presumptive tax regime. So government deems their income and charge them a particular tax. So that's what Mr. Taiwo was speaking about, that is, they are segregating them into nano, small, and they want to exempt some class of them from tax. While and also, when you start the presumptive tax regime, so what Lagos is doing, Lagos is use space, they use the size of business, they do some non-objective reviews, because I've been in the store, one of my friends was in lady sales gold, and they came into our store and said, you pay 7,000. Or is it 70,000? And I told her that, and I asked the person, I said, can you tell me the basis? For the lady pitched me that I should not stop killing because my tax man in me came with it, and I was asking the Lagos the person, what is your tax base? What is the basis for this assessment? So my friend pitched me, and the next thing she whispered, I said, 70K is good, actually. He has 2 stores joined together. That neighbor uses 1 store, and she's paying 50,000 naira for that 1 store, and our store is more. So I have to keep quiet too. So they also have some basis for presumptive tax. So but what the committee has done now is to sit down with Joint Revenue Board to now design a single presumptive tax regime, which the entire country will adopt, all the states can adopt them, to take into peculiarities of the states to each of the states. So there are some things you adopt and tweak your own state. So that's up to our next step, we can start develop. So now that many of them are formalizing, you can't say that informal sector doing that. And there are some people who deliberately say, like you go to a place like a day market, that someone is selling doors, and a day you can sell 100 million naira. You now tell me you are informal. Yes, you can formalize that kind of business. You can look for their documents. Because how will somebody import doors from China, and you have all the importation documents? Then also you receive most of their income from bank. So those ones are deliberately not keeping books. So what you do to those ones is to look for any information and slam them beauty. And slam them best of judgment, they will adjust after a while. So now with the new tax reform,
that this question has been coming for those small businesses that will do consultancy for that. You know what they're asking? Government say we should go and formalize now. I hope it's not that after I put my head in, they say it's accepted now. It's not after we have not brought all of us in. That government will not say, we have come, we've got all of you now. We are no longer to be said. That's the question is asking us.
Wait, why you don't see this exempted for life? Okay, but no one should think they will be exempted for life. The law, in fact, giving exemption or 0 rate is even against the principle of taxation, even against its constitution. But now, what government is saying is that pay 0 now until you grow, right? And they're also looking at themselves that they will never grow. So this same issue came up. I went to speak. The very popular church invited me to speak on tax reform. Church, you guys will know this first. I was in a stretch. And when I spoke about the exemptions, of the threshold, how you're earning about 1.3 million, that's so when he mounted the pulpit, to speak, he now said he was very worried when I mentioned that some class of people will not pay tax. And because he was also watching his members whether they were going to be jubilated. He said because they're not here. The class of people that are supposed that don't want to pay tax are not here. Because for him, he's praying that all these people will prosper and be the one funding Nigeria. And it was for me, it was a good thought because you should be thinking if government saying a class of people should not pay tax, I should be thinking of becoming or prospering. Because I'm doing this, and like Mr. Taiwo said that some people, everybody will become 100 million. Naturally, you won't become. I used to tell people that it's only when you're poor that you'll be adjusting. It's only when your business is not doing well that you'll be adjusting to stay within that 100 million. You are thinking you will stay between. That's because your daily income is coming by 100,000 today, 100, 200 tomorrow. If you get one contract now, they pay you like 300 million at once. Well, how do you want to adjust your books? It will no longer even make sense to you to adjust your books to the other 100.
Okay. So please, I want to, sorry to debate it for
No problem.
I just want to confirm something. So when I have a contract staff, in the time of engagement, so it's stated that it's coming in as a contract staff. But on the long run, it has been treated as a direct employee because he's a direct reports. Okay. So now it's more like on the appointment contract staff. So if I'm going to treat his tax liability, the obligation, so is it going to be as PIT or token tax?
Okay, how do you pay him? You pay him monthly
Yes,
or you pay him contract sum?
I have some, yeah, I have some.
So you pay him monthly, it's 70. There's no difference. Is that because not on contract? So when you say contract staff, what is the difference between contract staff and the normal employees? What's the difference?
I don't think contract staff, I don't think most times you don't job.
Hold on. What is the difference? No, hold on, I will let you come. Is the one that asks this question. I want to get what is the difference between that your contract staff and your employee?
With my own view, with his own line of work to us, I don't really see any different. But normally, the difference to outsource.
Wait, I want to
Yes, they.
So I'm asking his own perspective, so that I will answer his question based on that. Okay, Madam, the HR person here. We'll come back to you. Okay.
Okay, so normally, like you was trying to say, it's supposed to be like an outsourced person rendering service to us. But this person I'm saying now is more like a direct staff to us. But when it was coming in, it was stated, oh, we are coming as a contract staff. So now he's no longer acting as a contract staff. So your directing.
So your nomenclature of contract staff or your description of contract staff, just to dodge some additional benefits or something.
Some kind of
that is the idea. Dodge because you recruited him like you're recruiting anybody. Yes. But you just told him like contract staff. And because it's a contract staff, will not be entitled to certain things. But you pay him like you pay everybody on monthly basis. Don't give him a lump sum of money. So the only rule you apply, the way you calculate pay is the way you calculate it. So because whenever you are paying, what the law says that when you are paying, it deducts a certain amount. So you are paying like any salary and that's it. Okay, so that's the sort of because like I say, it's a recurring period. Okay, Madam, so we were now talking about different types of contract sourcing. The outsourcing, they don't pay them. They pay to a company.
They are sourced from now.
Now taking a contract,
Mm.
not a person. Now that company probably outsource like 20 staff to them. So you have, what they call, what's the name of that contract? Sir? Labor, no, the names you call the contract you give to that person. Provide me maybe personnel, personnel or something.
Yeah.
And the way they call it, they always coin that contract. Supply of what? Supply of labor, or what do you call it? Manpower supply. So in the books, you see manpower supply contract. So now, it's manpower supply contract. Until you now open it, you now see supply of 10 staff, 10 personnel with financial background, and 10 personnel with cleaning, 10 personnel with this. That is like you are describing the push support. So the whole contract is what you now charge withholding tax on that one.
On the management fees.
On the management fees, correct. On the management fees for depending on the type of contract.
Yes.
There's also further, so if you now say, okay, it's personnel outsourcing. Personnel outsourcing, that is where you charge on management fee. If it is labor supply or whatever, the person has to, we charge withholding on everything. And so you also need to differentiate by contracts what you have supplied. Because you may supply more than personnel.
That's true.
There will be other forms of supply. And again, it may not be personnel outsourcing like monthly personnel, it can be ad hoc. So if you supply a bodyguard now, the withholding tax will be on everything. Because it's protection you are supplying. So the person of that will be service-based service, it will not be personnel. So it depends on how the contract.
A bit of clarification, for which charging the withholding tax in this case? Don't forget that the contract employer now, we pay lump sum.
Yes.
For everybody on that schedule,
Yes.
maybe like 20-30 people, it's paying lump sum to their source company, to pay the staff on that schedule every month. So the 3,000 baht charge based on total payroll amount or their own service charge. So let's take all the
So Break is outsourcing, because I've explained that. Break is the outsourcing, personnel outsourcing. We know that what is paid is paying salaries. So there is going to be a margin, which is the sole fee.
The service charge.
Service charge. Some of them don't, it's now that they started getting wiser. Before they don't disclose how much they are paying.
Yes.
So when you don't disclose, you charge everything. And now without telling you, okay, you are paying 70,000, maybe 55. It's for the personnel. 15 is our management fee and service charge or something handling on that one. So you charge.
Or the 55 or.
Yes, you don't want the 15, you don't charge it.
That's right.
Just charge it.
Because I don't.
So if now, he can go and compute tax
Yes.
on the 55
Yes.
for the staff. You know there is staff now.
Yeah, staff,
They have to pay their own tax. So it's one that will now compute the pay. So he owns the staff. He has only you know, if there's any liability, you can't hold that staff.
Yes,
in your company.
Yes.
You have to report to employer. So, and that's why they even owe you to be able to replace them at will. Because you don't have contract with those. So the last one, accreditation of tax agents. You know, Mr. Taiwo spoke about this. Now, for you to be able to file tax returns on behalf of your client, must be accredited by the tax authority. Okay.
I'm talking about this I think that was
You know what?
set up. There was a time that Lagos State was the head of like Harvard.
Sorry, please.
Something like in tax monitoring. I think the idea was we invite both accountants, tax consultants to go out, look for companies to check their books and 10% of.
Okay, that one is different. What that one does is just trying to outsource some of the responsibility of enforcement to professionals to help them look for tax defaulters. For me, there was a time we NRS also did it accrediting some people to do audits. Audits on behalf of
Come on, that's come on.
and I guess it's something. But though there was a kick against it because though the law says you cannot use other people for tax collection. So there was something that was done to salvage that situation, which
So you can open something, bank collection arrangements for about 3 years.
for 3 days,
3 years,
3 years. Bank collection.
bank collection arrangement.
Already.
We're verifying those rates, regularly.
And you are verifying, you are not collecting tax.
I think that they must take
So it was about auditing, do verifications and all those things. That is not accreditation. So what accreditation does? Is just to accreditation, you have nothing to do with tax authority. They are not appointing you for anything. You are still you have your client. You have your client to attend it. What the tax authority is only telling you is that before you can represent your client, you must be accredited by us. So why? It's for transparency, it's for credibility. And why do we even need this? If not that some people have not done their job. So CITN kicked against this. You know CITN, Qatar Youth Organization of Nigeria. By the way, I'm the Dean of Faculty of Tax Policy and Administration of CITN. National. So I was part of the one that used it for CITN. I didn't kick, no, I wasn't the one that kicked against it. I was even the one that was trying to let them know why it should be done. And it's because professional bodies have also neglected their duty. And so credibility of their services are no longer. There was a time in NRS, we found about 7 accounts. 7 companies' accounts, the same figure. Yes, of the same figure. So 7 companies have the same figure. And it was made by the same accountant. I think different accountants, but the same figure. So what it simply means is that there was no audit, there was nothing, they just carried and changed the name. So that is part of losing credibility. And what does that do? It means that you're doing taxation, people are not filing returns, and you that you're supposed to help them, you're also not doing the right thing. So say okay, and also now there's even more call for we have systems, and they will be representing their clients in using those systems, and so they also need to be foolproof to ensure that they don't corrupt the system, whether through malwares and the rest. So there's a lot of accreditation issue. So the way accreditation is going to work is that there will be rating. So if you've been filing returns and your accounts have been seen to be very good, fair, true and fair thing. So it gets to a point probably you've done it for some consecutive years to get the rating A. Then by the time rating B, C. So if you are on rating A, the tax authority will not bother to review to audit your clients. And so people will be rushing towards a tax agent that has good rates. So you have to market yourself to know that it has good credibility. So let's move on. So upon all this, the practical step, implementing a robust record-keeping system Adopt standardized accounting software such as ERP, SAP, Oracle, QuickBooks, and others. So, practical say you must have this kind of accounting system that helps to then also digitize invoices and receipts. Move away from the manual one and digitize them. Makes your record keeping very simple. Maintain transactions audit trail. Maintain transaction audit trails. So it helps you segregate taxable and non-taxable income. Reconcile your bank statement on a monthly basis. I'm sure every serious business will do this. When I was an accountant of a big, I do it on a weekly basis. Bank statement, weekly basis. Then I was working for one telecom. But I mentioned it to all of you. You know Huawei. Huawei. I was the accountant for about 5 years. The monthly internal tax health checks prevent annual surprises, institute a robust internal control system for tax compliance documentation. So it's good to do now. What's this called? Internal, what's it called in accounting? Not it.
Internal checks.
Internal checks, internal control. So now you need to move your internal control beyond just accounting entries. Taxation checks too should be. When I was in Huawei, I remember that one of my major job is when they submit vouchers, I check if all the appropriate taxes have been taken, then I compute withholding tax on every voucher before the accountant will post, and I ensure that. And once they finish posting, I also check and see whether the right rate was taken. I would have advised on the rate and see whether the right rate was taken. And also the first check, I will also help do some tax planning and see if the invoice is saying otherwise. You know, like Taiwo said, okay, yeah, let me not also tax plan. Yeah, okay.
Which is best practice, but some companies would want to use a particular account for it, another one for expenses, just because they don't want to crowd the inflow account. Is it practical to do that? So you have one bank and one account.
It's okay. It's very simple for you. You know that this is your expenditure account. This is your income account. It's very simple. That's if they can maintain it. I think that's even more interesting. So you tell them that the only thing you have there is charges. The only thing you have without your expenditure account will probably be charges, bank charges, and the rest. It makes it simple. If you can maintain it, I don't know.
If the customer will not say to transfer from that revenue account, so it's not turnover.
No, you can explain it now. It's simple. It's from your account to your account. That's simple. From your account to your account. It's not, except those of you that you say my company, but you see John and Co. Nigeria Limited, and you see John James and Co. Nigeria Limited. They are not the same accounts. But the man is saying himself as the principal person in between the two companies. I say it's the same money. No. James John will be doing business with John James. As far as the law is concerned, they are different entities. Whether it's the same people that own them or not, they are different entities. In fact, both James John Nigeria Limited and John James Nigeria Limited, and James John as a person, three of them will pay tax. That's what the law says, and that's what it is, because there are three different entities. So, okay, let's move on. Now, internal compliance, calendars, and control. So you can keep calendars that helps you to read. So every business should operate a structured task calendar, including VAT filing deadlines, WAT remittance deadlines, payee remittance dates, annual returns timelines, estimated tax installments, where applicable. So you need to have a calendar that does this. I remember one of my directors, when he was resigning, retired, wanted to go to consultancy. So he called us that time. And you know what? look for common mistakes that businesses used to do. Then let me draw it. So you want to draw up a compliance check system. So that's why you wanted to school cell. So we wanted it in the areas of those that claim incentives. So there are some. I remember we drawing up something like this. So internal control should include dual review of task computation, approval workflows, segregation of duties, periodic compliance audits. Compliance should be system driven, not personality driven. So there should be a system for it. So it's not about persons. So leveraging technology and professional support. So the reform environment favors digital compliance. You all know that by now. And business should, one, use e-filing platforms, automate tax computation, integrate ERP systems with tax models, and use digital payroll systems. So if you look at the even e-invoicing that we're talking about now, most accounting software today have e-invoicing in them already.
That's the ERPs.
ERPs, many of them have e-invoicing. So what we just do is to integrate it with that of the tax authority. Then also seek professional support. Professional support remains essential. Yes, you are making tax as simple as possible, even with this reform. Before now, we used to say you don't need to understand the tax law, get a professional to understand. We said, no, let's draft the law in simple and plain English. If you must communicate something to people, they should understand it. So we are moving from the King James version of law, now the easy to read, not even King James. I know in the course of this reform, some folks also stood up and said the law is biased. Our women folks, they said the law was only talking about he, she. And there's no she in the law. Do you know that? So there's something called tax gender inequality. So they say there's no gender, that the law is not gender friendly. So you see provision like where a taxpayer fails to file returns, he shall be. So you see E, many of our laws, you see E. So the women said no. Our tax policies should also recognize female gender. So we have to change those of the say where a taxpayer fails to file return. Such person. No, you have to go to one. You say what? We don't recognize that in Nigeria. You must be one. You must be one gender. We don't recognize non-gender in Nigeria. So now, professional, so as an individual, you can file your returns, you can represent yourself. So tax consultants, chartered accountants, legal advisors, industry tax groups, and leverage their use. Now we are even advocating for pro bono services. We'll be launching something very soon that support businesses at different levels. So especially for transfer pricing, this one you need professionals. I'm not sure anybody can do this. Fine, we want to start with transfer pricing in a big board.
Yeah, big part.
Then cross-border transactions, merger, restructuring, and dispute resolution. So the cost of non-compliance far exceeds the cost of professional advice. So we need to know this. Then best practice for timely and accurate filing. File early, not on deadline day. This is what is common. A lot of people now say, hey, FRS, your system have crashed. Why? When there is a door and they say, oh, the TV is set at 12 o'clock and it's will be closing by 12:15. And we all sit down and at 12, all of us want to get out. It's difficult to get out of this door. Some people will not get out till it is deadline or deadline is over. So we need to, no matter the capacity of yourself or your capacity of your system. So conduct quarterly internal reviews, respond promptly to tax authorities. Correspondences is even an offense not to respond. Failure to respond is consent, right? So if the send you an assessment and you don't respond, that means you have agreed, you consented to it. And so when your bank blocks your account or lend your account, they will tell them that, see, oh, this man has agreed to pay this amount. So can you help us recover it? Then the bank will lend your account for you to come and settle it. So they won't debit your account. So that one, when people say government will debit your account, no, government will not debit your account. No matter what Lagos State told you, Lagos State did that to frighten people too. So people will quickly come and solve the problem. Though they have the power, but the power is not to direct debit. They still have to go to court, get a garnishee, and their processes. Maintain a clear documentation trail. Document tax position taken in gray areas. So strategic risk compliance challenges. You may have higher audit risk because they have more information about you now. Effective tax rate based assessment may trigger more transfer pricing and profit allocation audits. That's sophisticated ones. Real-time data ingestion allows, NRS to detect anomalies because they get your data now real time. Increased reporting requirement, I've spoken about this, more granular disclosures on related party transactions, cross-border payments, and digital revenues. Mandatory declaration of planning schemes, mandatory alignment of finance, tax, IT, and audit teams. So everybody needs to be working as you're doing your project management. So you need to be thinking about the tax application. So when you go and market, even as a marketer, you go market to bring customer. You need to let your customers know the tax implications as they're buying the product. Or you want to get a credit. They want to get a credit from you, you need to let them know what are the tax obligations that applies. So the marketer don't bring the customer and after. The customer say, your people didn't tell me this. The man said, I thought they've told you everything. So cash flow pressures, changes to withholding and VAT timing can affect treasury management. It can increase and can reduce. So, well, this ones will even help to increase cash flow because withholding tax rate has been reduced and VAT input VAT, input VAT is now claimable. So it will now help cash flow. Traditional penalties for late adoption of new digital filing rules also change. So directors now have liability, greater accountabilities for board members on the governance reforms. Directors must demonstrate oversight of tax risk management and exposure sanctions for offenses committed by corporate bodies. Now, so directors are exposed, like I said, they can be held responsible for offenses committed by the organization. So we need to, and that ends the second section of the paper. Maybe I should pause for a small question first. Is there any question? Okay, that's it.
So, I mean, not a lot of rationale, even like continuing but the question just came to me that I'm not considering myself. Why are these not starting?
Why?
Why are they expensive?
What's gifts?
Yes.
Because tax is paid on income. And tax is paid on income, not just on gifts. Now, gifts too, of course, there's also another rationale. What's constituted a gift? So, you must have not performed anything to receive a gift.
Cash rate, don't make it transfer. So that's the gift.
Like how
Probably pay 1 million, whatever the case may be. Whatever the case may be. Just the choice of being.
Yeah, I'm just really to pass in the area of the different.
Before you can give somebody,
Yes.
so we need to look for, so you that you are giving. So now, are you looking at the hand of the person giving or the person receiving?
This is really because.
Person receiving. So now, there's a double, you check your owner, you know that you're giving. Why, how much do you have? Now, before we know it's gift. How much do you have? Let's say you have 2 million. You give her 1 million. Will anybody believe the secret?
Yeah.
The family member, yeah.
And that's the first I will earn 2 million and give out 1 million as a gift.
Yes.
Okay, okay, you know what, it will be subject to investigation.
Yes.
Because I can't see you earning 2 million. You give one person 1 million, there must have been something.
So what?
Again, hold on. Again, see, you know that tax is 1 year, it's an annual thing. It's an annual thing.
Yes.
I can also, if it's a one-off,
Yes.
it can be looked for, but I see that every month you are giving people. From your 2 million salary.
So this is this scenario. People black taxes. So there are number of workers that are gifting family members.
I agree. I don't want bad taxes. It can only be said in Africa. But you know what? Even the amount you give, is still, there can be a trail. Okay, if I had 1 million now, maybe I can easily give someone 50K, 100K.
Yeah.
At the end of the day, probably I will give like 30%.
Okay.
I'll give like 30%. I won't be. I have other expenses. An average person spend about, well, depending on how big you are, maybe about 40%. Yeah, 40-50% on themselves. Taking care of your family, your immediate family, feeding, transportation, and the rest. So many people save about 20%. So it's expected that you should not be giving more than another 30%. In fact, many things you want to do, even abroad, if you want to buy a mortgage, if you want to pay mortgage, what they look at is 30% of your income. That you can use to, that should not be more than 30%. That's when they want to check your how affordable, if you can afford it. So when I see that every month you are giving somebody half of your salary, different people, and when it calls for me to check more, to check you, to investigate you more. So, but well, they are law in Nigeria, we don't tax it. It's we just believe because of this black tax too. I think it has become part of our culture too. So to allow some, because in some point they look at the gift as an income. So the person receiving it.
But what I've worked hard for is that taxing with them, those that are doing exactly working hard for it. I love the tax. So for income, I have worked hard.
And you are the one that gave them.
Yes, and by choice. So if they are not doing anything and they are receiving, why can't that income that they have? It's not working for tax. That's what I'm saying. Why is it?
That's spending. And people that don't make it, so sometimes don't make it,
Oh, yeah.
and someone is doing tax. So that's what we say.
Gift she's trying to. One is another.
Yeah.
That's
And the other the receiver,
Then the other giver, then they told me, I think they are approved.
and now they are going to one thing, no, it's not, she's not trying to give.
So it's the hand of giver, I think
So in the end of the giver, no, don't tax
Because you've already
when you're
taxed
spending,
already.
you don't tax expenses, you don't tax expenses except you're paying it on. And for purchasing goods and services. That's the only tax apply on spending. But you don't charge an income tax before. But the person that receives is who she's concerns about, and you should tax them. So if you tax them, what does do not impact, will still come back to.
We come back to you now, you have to, you won't pay now.
You increase the given.
I'm this income I'm getting.
No, because the person is asking you that you should give them the 5,000 naira. You don't give them the 5,000, the tax part of it, they come back to you. And then so, he was taking us to, allowing deductions, deductible donations,
Yeah.
which the law allows.
Yeah.
But the new law allows you to even donate to your church as a company.
Forget receipts, and that's what we establish that.
You collect your receipts.
Yeah.
No, it's not receipt, you do proper documentation. But it's not like giving your title and want to claim it.
It's just donations.
And that's as a company, not an individual. Individuals are not allowed to do it. And well, it's not tax deductible. It's not like you're not allowed, you can do anything. But it's not tax deductible.
Even my tithe.
As well, as a company, right?
As a company.
No, you can't claim your title. It's a free will given. It's a free will given to God. It's free will now, it's not compelled. So, okay, and let's move on to section 3. We're going to be talking about tax reform and the way forward for businesses. Assess the long-term implication of tax reform and business growth, identify strategic adjustment required for sustainability and compliance, anticipate the future of policy direction. Let's move on. So long-term implication for tax reform for business growth. Number 1, move from compliance strategy. That's the tax reform signal what a broader base. We have spoken about now the informal will become formal, and of course as they are becoming formal, they are expanding the net, whether they are paying tax now or not. Later,
Later, we'll come back.
they will start giving birth to more babies inside the net. And as they are giving birth to more babies inside, they will become mature. And as they become mature, they will pay tax. Like what you were saying, yes, before you left, that somebody is saying that hope is not that you want to bring them into the net and start squeezing them. Do they want to remain small too?
Well, they choose to read, they can choose to remain small.
No, nobody will choose to remain small. Will anybody choose to remain small? Is it possible?
Yeah, some companies are proud of that.
Some companies abroad
Yes, they
choose to remain small.
Yeah,
Yes.
not going to go more than this.
Good. What's tax implication? What's the tax implication in Nigeria? You want to choose to remain small.
No, the same for companies outside, not necessarily.
But in Nigeria, I don't think anybody will choose to remain small.
Yes, very true.
You as an individual, will you choose to remain small? I will choose to remain to become big so that I can pay the tax. So that when they call, it's not even significant, but you've not made money, that's why you're worried about tax. Tax is a consequence of your prosperity. So if you have not prospered, it's not tax. I need to prosper so that I can
Because there are forum that we try to explain to people, especially the Igbo traders, that look, there's no need to worry about this reform. Just do this, and they will want you to sign a bond for them.
no problem. I'll sign
it tomorrow.
No problem, sign the bond. What I'm telling you is that those people traders, most of them are over 100 million.
I know that they do billion.
So what else? What do you want to sign?
But they want to remain this. It's supposed to be 100 million.
And you want to help them to adjust their. That's all you are just saying. You want to help them to doctor their turnover. Please, what we should tell them is that there's improved visibility. They import one thing to Alaba, the customer will report it, we have seen it.
So you know what they will do in the port of cost of importing, you are under invoice
To what extent?
to because things that are costing them 50,000, they will put it at 10,000.
And you know, custom does not do that again. Custom do pre-shipment inspection,
Okay.
and they have what bill of lading,
No.
bill from abroad, and they already have the amount here. Sometimes they disallow your invoice and use, and now that we have a national single window, we have customs, all of them, and FRA is the one in charge of it. So you bring a tray, and that tray, everybody drop your documents inside. And now it's already have the access oh, to access it. And that time they are not asking you for tax, just process your document. From everybody from, as you process everything is inside the system. The day you come and say, in fact, from there, you know they will even start with VAT as custom duty. So you have already paid VAT of 500 million naira.
And you say like 100.
Now come back and say
like 100 million company.
Sorry, sir. Just to get questions of paper importation now. Specifically on our bed, why is it so high?
why is it so high?
Yeah,
Oh, there.
for vehicles,
And because that's the rate.
And why now?
Why?
I don't know why you say.
Okay, what is your parameter for things for judging that, sir?
Because I think it's like 50%.
No, it's not. They will remove
Yeah, there you go.
They will remove about
Yeah, there about
for all class of vehicles, all class of vehicles.
I think it also depends on the year and model.
So, okay, that means
Yeah, but it's
we are driving like 2024. Those are the ones that I like. Because I think this year okay, last year, I shipped in a vehicle of 2014 or 2015.
Okay.
That's 10 years.
Yes.
About 5 million.
No, I paid 2.99.
Is it car?
You know what?
It's a car.
3 million.
Apart
Apart from
It's a
that,
car.
apart from that,
It's a car.
the agent work with the agent even work with
It's a car.
I sent to 3 agents. See, I sent to 3 agents, please give me my fee. One said 2.9, one said 3 million, the other one said 2.8. In fact, the person who said 2.9 worked with 5-star shipping. You know 5-star shipping? They also have Grimaldi. The guy and the ship that was bringing the car was Grimaldi. So that's why I gave it to him. It's one that's 2.9. Somebody said 2.8, another one said 3 million. So it's about the same thing. So I gave the 2.9 because the ship it works in that ship company. So
it wasn't always like that. So I mean that's why.
and the vehicle was about how much that by that vehicle? Maybe $4,000.
And then we 2.9. Is that what I said?
4,000.
Is that what I
Value.
How much is the
What are 50% now? That's what I say.
someone's that? Someone's that. Okay. Okay. So it's not new, it's not new rate. Everyone is going to know, it was still reduced last year, there was a tax that was removed last year. Now even make it reduce a bit. Okay, let's move on. So long-term effects, there's going to be some positive, which is you can predict the tax environment, increase investor confidence. So something happened in the capital market last year, December, because of what?
This
You need to ask that.
You saw,
The new tax act.
The tax.
People rolled out that.
okay, was that why the market almost crashed?
Yes.
It was.
People are moving their money out because they say that you want to
It
forget.
was
The panic,
it was perception.
Perception.
Because the reason why it happened was not true. People said, you know, you'll be paying CGT at 30%. And so people started withdrawing their money, and I was wondering where you would want to take the money. Now what the law says, people said foreign investors will no longer come. Foreign investors don't look at this kind of you increase my tax. What it means is that I'm imagining you will be reduced. But where are you taking that money? And some people did not think on this. And you know one thing, it was also a plan. So tax, I used to stockbrokers and the rest are also part of this business. The more transaction you do on the market,
cash out.
the more money they make. The more money they make. So all those people who were withdrawing their money, exit fee.
Brokers never lose.
You pay exit fee. When you bring it, they will pay them a fee again. And so they would rather make you do it. Activity for them, they make money. The exchange will make money. Some people did not understand that. They were just, some people did not understand, they just move it. I spoke to Cardinal Stone about two companies invited me last year that I went to speak to them. And I told them, no, with a small tax, no serious businessman uses tax as a reason not to invest. Because you must have made profit, made income before you pay tax. Now it's not a cost. It's a consequence of your prosperity. Yes. It is not a cost. So if you are prosper, let us stay part of your prosperity now. Reduce arbitrary assessment. Now, because you have more data, nobody can just give you BOJ of without data. Digital efficiency. Then challenges like the higher compliance cost initially because you need to file different returns, or you want to install new digital systems that will ensure to do that. With greater scrutiny, reduce room for aggressive tax planning because you must declare. The tax reform trajectory favors structured, governed businesses. So the reform will favor those who are doing it right before now. They will, in fact, may not see any difference. They will even more, like now, businesses who have been filing VAT and not claiming input before. And this will improve their cash flow.
So for those people that are into importation, this input output comes, what size is going to work if them have import materials from abroad? The issue of VAT input. How is that going to? Because for those foreign goods, fats are not most time charged.
Yeah.
So what?
They are charged.
How do we?
They are charged. They are charged at the ports. So we spoke about car. You sell car, you import the car. When you're clearing, it's pay VAT on that.
Okay, on import duty, VAT on import duty.
VAT on the total cost of the car, not the purchase. The total cost of the car, including the duty you pay. So you pay VAT on it. So when you resell it, you also charge VAT on it. You remove all the VAT you pay.
The dollar value.
That's something
Like it's not a new bought.
I'm talking about as a businessman.
Yes.
So if you are the one using it, you are the final.
What I'm saying is that the car you bought for 5,000.
Yes.
The VAT is not charged on that purchase here.
No, it's here now.
When you were clearing.
Yes, when you clear it, you bought the car at 5,000.
The VAT is not money.
It is. You bought the car at 5,000. You probably have cleared and all those things. So it's still therefore
Free of that.
whatever everything, all the everything together, custom will put VAT on it.
Yeah.
And you pay the VAT before you clear it. So aside from your custom duty, you pay VAT. So if you are the one using it, you are the final consumer, you can't claim it. But if you're reselling it, once you sell it, you collect VAT, you take the one you have claimed, you have just paid from it and you are good. Then business, so strategic adjustment that is required for sustainability, business must institutionalize tax governance. So it should be part of their system. There must be a governance structure for taxation to check that every business we do, every as the tax.
Sorry, sir. I noticed that the people in the past and the media up until now, when you look at for the service, you just look at it.
And you also just connect the money.
Usually. So, but now it's not happening. So if you are reselling now, which is not going to charge out
You also need to charge.
you understand? So maybe what I want to add every month, would you collect evidence of direct transport?
So the law has placed an obligation on you if you are selling to collect VAT from your customers. The way you negotiated your price, the price for your goods, is the same way you will now put the VAT that government has given me an obligation to do it and you collect it. If not, your transaction should not be concluded.
So when
But if you allow them not to pay, you will pay it. Because government will now look at your amount and say, and just take your turnover and charge VAT on the 7.5. And you will pay it. They will charge you first, they will charge you failure to collect. Or failure to remit. They will say it is not collect. They will charge you penalty for failure to remit. You pay that amount and pay penalty and interest on the
you wouldn't even need to pay government again on that issue if you had paid from the incomes already.
No, you will pay. So the way it works, if you are buying the goods, you pay VAT.
Yes. I'm selling it now.
If you are reselling it,
Now,
now you buy it for 100,000 naira. When you buy it, you pay VAT 7.5. So that is what 7,500. Now let's say you sell for 200,000.
Yeah.
You will now collect VAT of 7.5, which is what 15,000. Then how much do you pay? 7.5. That's 75. You don't pay 75. You remove. No, you remove.
You're able from the output.
You remove from the output and remit the 27. So on the total amount, you have remitted you pay 50,000.
So I know the point I'm trying to make is that I don't need to get to anybody who I'm selling to.
You don't need to make any. You don't need to make. You may not need to make any proof. Some of them will sell that we claim they are input VAT. Like when you pay, someone claim, can just say give us evidence of. Once you stated that your invoice, that's enough assumption. It's not withholding that. Once you stated that your invoice that you charge. Fine,
nobody wants to remove that. Otherwise,
you must.
Yeah,
You are supposed to charge it. Yeah, you will. So
yeah.
it's because you have not suffered this. People have not audited you. That's why you think it's not an issue. But if you have faced the consequence for once, you will not.
So
People use it to negotiate their price.
I should quickly interest on the
No. You don't charge me to interest on the bank. Once you see the bank charge you for is the bank charge you a fee for your transaction.
Yeah.
When they charge you a fee for that transaction, because it's a service they perform to you, you also charge the VAT on that fee, not on the interest. So that's the thing. So build internal tax capacity, and not just your external tax consultant. Build people within your accounting to have tax capacity. I remember when I was joining Huawei, was tax purely the tested meal. Invest in compliance technology, conduct tax risk assessment, reevaluate business models where tax exposure is high, strengthen documentation culture. So you can see documentation keep on coming in. Because that's the only way you can prove your tax compliance. It's voluntary compliance, self-assessment. If you tell me she's out. I gave out 1 million naira as gifts. You will also explain. Like those, you say you were still tired, right? So those who were doing those kit makers, they will say, so one person was called and said, please, a lawyer, he just finished delivering service. He said, please, you don't send the money. He said, no, they said I'm not a very expensive, very expensive. He said, it's not very expensive. So you will say it's a personal money for burial. You will not, that is not an income to the lawyer. So, but what they don't know is that for every accountant will say for every debit entry, there must be a correspondent entry. And there's an impact in the books of everybody. What is an expense to you is an income to another person. So when you say it's very hard, listen, I come and meet you. Who earned that very expensive? We need to go and look into that person's book. Are you an undertaker? And you are earning something on the problem. So we need to know what they are for. Or you say it's gifts. Are you a charity? So tax strategies must align with business growth strategy. So you can't tell me that you want to grow your business, but I can see you are giving gifts. Have you changed when you? So anticipating future direction. Based on the reform trend, we can expect greater digital integration. Now everything is digital. Real-time transaction monitoring, data sharing between agencies. I've told you how the NRS will continually share data now. Expansion of indirect tax system, simplify small business taxation. Then stronger anti-avoidance provision. What we don't know, there's something called exchange of information. And we have automatic exchange of information, we have spontaneous exchange of information, and we have exchange of information on request. And these are international exchange of information, not even local. So I may have an agreement with UK. In fact, it's not even one country. We have what we call multilateral agreement. So when you earn income in UK today, UK will send me everything that you have earned income because you are taxable in Nigeria. So there's been an agreement among countries. You know, your income is, you are being taxed on your worldwide income. Do you know that? So if you are a Nigerian citizen and you earn income in US, then you will be taxable in Nigeria. Even if you enter motor and plane and went to US, I went to US to do that business and you come back. You are going to be taxed in Nigeria. No, they won't tax you because you are not a person. Many times they don't tax it. But if it's going to be taxed, because there are some special cases, so they are part of a local contract and you deliver that contract locally, you may be taxed, having seen that you came into the jurisdiction. But if you were sourced from Nigeria to deliver that one, you were not doing it because you are there to do it. You were not maybe sourced from Nigeria. That income belongs to Nigeria, so it will be taxed in Nigeria. But there are some times where they can confusion and they tax it. We give you credit in Nigeria for it. Just show an evidence that, oh, I pay tax on this. Then you take it away. However, if the tax is lower, you pay the balance. And if the tax is higher, you of course, government cannot give you money now, that is not to the government. So if you are a remote worker, okay, You also pay tax in Nigeria. Not where you earn the money, because you are resident of Nigeria.
What's if they remove money?
They can't remove the money because if you are not their resident, you won't charge. You are here, you are on the computer, working for somebody abroad. You earn that money is good. Not
Okay,
any.
here's another question.
Hold on, no, I will then address question before.
Related, it's about.
Let's
So there are some remote platforms
Okay.
that conduct taxes for your earnings already. So will that serve as taxed income, or Nigeria is still going to tax you from the net?
So it depends on what platform. So some platforms are agents of Nigeria. Like Google,
I'm
YouTube.
talking about
Amazon.
Fiverr,
So some of them are tax agents of Nigeria. We have appointed some of them to collect tax, and it's VAT, it's not your. It's on your income.
yes.
Or when you buy on your
No,
income.
I'm talking about remote workers.
Okay, maybe that's something we don't need tax. Now it depends on how you see this. You may be an outsource. And some are high, some if it's this outsource business, some too can outsource a company to help them get let me say something like a call center.
So these platforms, they are
Like
established
right? Okay,
in the US,
Okay.
right? So when you charge for your
So you say US is a notorious jurisdiction, they don't care about any other country's tax system. So they
So
tax
what I'm
you.
saying is that when these platforms, they would remove maybe there's tax. They call it tax. So they remove it from your income and then give you the net. Because what you are charging your clients, for example, is like the gross of it. So you are charging them $100,000. And then the platform would deduct 15% as tax. So when you get your $85,000, is Nigeria going to like deduct tax again?
Okay, whatever you collect, so depending on what tax, we need to know what tax it is. Before we know, is it income tax, like someone said it's it's not tax, it is what's it called? It is a commission. So we need to know if it's commission.
So
If
if
it
it's
is
a
tax,
commission,
if it is commission, that is their own fee for you getting on that platform. So it's not a tax. When it is tax and it is income tax, it's two things. It's either the country don't care, like US, you make money from the organizations you will tax. That does not stop you from paying tax in Nigeria. But now, because US does not sign tax treaties with any country, because they don't want to have recourse to your system. When Nigeria now grants you a relief that pays such tax, but we need to be sure that it starts you actually. We need to be sure that it starts your pay. So you can get a relief for that. But if it's other countries like the UK, where you have treaties, and you know that you're bringing that income to the tax. So that we need to be sure that it is tax. So what I found out is that many people write tax. Which is not actually tax. And again, it is tax. Is it a transaction tax? Is it an income tax? Or a tax you're carrying on behalf of other person? We need to go to still like what I can do that.
I'm not serious. I'm not serious. Have either of those two cases. Somebody, for example, okay, he's a consultant and he's working. Yeah, he's a consultant. Okay. Yeah, okay. How would you pay you and you're paying? I pay one payment.
It's in the UK.
Yes,
You're working for me here.
yeah, you are here in Nigeria. Companies here in Nigeria.
Yes.
I mean,
It does not live, it lives in the UK. And it's working for you here. So what is the response from you? Is there a remote one?
So that's the second scenario now. There's another one. It's an issue that is more like you. It's a virtual one.
The virtual one.
That's the second one. But the other one is like important. You have a contractual agreement. 6 months where you get paid for the month.
So what you apply them from the future. You apply them from the future. And some remote basis.
Yes.
What it does for you, everything is based on the skill and cost over the internet. You won't get it. Okay, that will be treated as a good worker.
Yes.
Residents
So yes.
It will not be taxable. Because that person is skilled.
Even though it's not the
Yes, on your payroll, yes, income here, it's providing you the service. It's providing you that service, so it's there. So you are not taxed from your where you earn income, you are taxed from where you reside. We practice residence-based taxation. Except it's a contract. If it's a contract, you must come here to deliver the contract. You must come here to sign that. So if it's an employment, it's different.
Okay, so the second one. First one. Second one, I think that's clear, right? So you pay you.
Employment you pay you this money, you be taxable in this country.
Okay, so this the first
Where you reside.
So the first one is like
Now, there are also classes of those we call non-resident. Non-resident. If they perform some economic activity, that they tax on. Based on contracts. So those ones we declare them to taxable based on significant. It's not employment. Employment is different. So the contract. Contract is taxable. It's a contract.
even though it's pay now.
It doesn't matter. The bank will charge that tax on currency of
No payment.
but also pay that tax on the account. Maybe it's a contract.
So
It's only employment that you don't charge. But you the wireless.
diaspora.
They pay tax in the US. When they earn income, what kind of income?
Rents.
They will pay tax in Nigeria. They will pay on Nigerian income. And because that's not their employment. Because that's not what US is taxing about. In Nigeria,
Nobody loves the rent and Nigerian.
and they will also declare that they pay tax. But like I said, US was okay. So US, if you use US, it's an abnormal country. They don't care about anybody. Do you know that if you're a US citizen in Nigeria, you may likely pay tax to US because your bank, once you show a bank that you have a bank possibility. So that's how US operates. Then if you are a UK citizen, that doesn't happen.
So when you say Nigeria strategy on world, so
So if you are a Nigerian resident, not Nigerian citizen, you're a Nigerian resident, what it means is that you reside in Nigeria, or you have economic ties, you have family ties, and you are here, you own a business here, you do business here. Or you are here for up to 183 days in a year. You see you as an investment. And wherever you make income, that income belongs to you in Nigeria and it's taxed. So you add everything together and apply tax. That's how it works. So you may be here and be earning, and you have investment in UK. You may be here and you have an investment in UK. The money you earn there is tax. They won't ask you once you don't live there. Okay, let's move on. Okay, business should assume transparency will increase, not decrease. So it should continue. So positioning business for compliance growth. The winning strategy is balance, remain compliant, optimize incentive legally, structure transaction efficiently, plan tax impact before major decision. No, before, if you want to do a business, you must conduct a feasibility study, right? You want to know how profitable this business is. Is that, we are all businessmen here now. You must do that. That's what decide your decision. Then also, what is the tax exposure? What is the tax impact? Engage proactively with tax authorities. Always now there's a provision in the law that allows you to seek what they call advanced tax ruling. You want to do a business and you think it's a bit complicated, you don't know how the tax will be, you can ask the tax authority. I intend to do this business, and this is my cost, this is my income, this is how it do. Will I be entitled to tax? And what are also the documentation available? You can ask the tax authority for clarity. So tax should not merely be paid, it should be managed strategically. So it's I've gotten to the last slide. So in conclusion, before I read the conclusion, maybe I should, well, we can still do that. Nigeria's new regime represents a structural transformation rather than an incremental adjustment. So businesses and individuals must transition from minimal compliance models to governance-driven management systems. So it should be well structured how to comply with your taxes. There are some organizations, in fact, many big organizations think more about their reputation than even think more about their reputation. So when you tell them about tax planning, they look at it. I've seen an organization that they were charged to pay a penalty and interest of about 5 million. And they asked, rather than pay that 5 million for penalty and interest, what it means is that they have neglected their duty. The man asked, say, can I pay you 3 million as clear? Why will the court already pay 2 million penalty? You know why? Why they asked that? They did that. Because he doesn't want to. His reputation is more on the line when he's paying higher penalties. His reputation is more on the line. So he doesn't mind to give the money and let it not be recorded that he pays so much money because it's trying to have the reputation of his business. And so many people should think more about their reputation than making money or saving money. So when you think about that, it drives you to conclude. So the message of the reform is clear. Compliance is not negotiable. Documentation is essential. Technology is central. And growth and compliance must coexist. Growth and compliance. Someone that was talking about people trying to doctor their turnover to remain within as you are growing. Start thinking about the compliance implication. Now, many people are transitioning between business lift to company. What it means is that you're having bigger status. And as you're having bigger status, they're also having bigger compliance obligation. You say what? Headache. Bigger headache. But you have saved money. You have saved all your taxes. It's more, there's more headache than in business than company. Because the states will be chasing you. And the states, many of them are very, very uncultured, or the way they collect taxes, they can beat you up to collect the tax. I don't know what else in Port Harcourt. You see, who has stayed in Port Harcourt before? You know those they call Obiakpo boys, weekends boys. They went out hospital and carry X-ray machine. That is that's their own district. They are seasoned because they've not paid tax. So they don't do it rightly. Okay,
Okay, so the first one, is there a measure in place to ensure that all states are aligned and produce uniform enactments for this new reform?
So like what if you heard he said something about it, and the tax reform we have today does not apply to state taxes. So it does not apply to state taxes. So there's something they use to enhance most of their life. What taxes and levies are put based on Election Act. The Supreme Court has said it's as a legal document and was abolished. So one of the work that the tax reform committee has done is to develop a new model law. And all of them can take to their state. And they have very high numbers of taxes they are collecting. So they streamline it with few taxes, and also develop the law that they will take to their state assembly. They will now enact it into law. So what he said it as a last count, about 12 states have passed that law. About 13 states is before the assembly.
It means that they still have some form of control.
No, they have autonomy. So we practice what is called fiscal federalism in Nigeria. What it means is that every state and local government have autonomy for revenue generation. The federal government cannot tell them what to do in terms of revenue generation. So that is what is causing multiplicity of taxes. So now what we have done is to develop a law that streamline them in the spirit of harmonization.
So that law would call them.
Become them. So once they pass that law, and also, and that's why federal government also reduce their own tax and give some, like now for VAT before, federal government collect 15%, they reduce it to 10%, give 5% to the state. So the state will forget many nuisance taxes they are collecting. I'm sure if you start check all those boys that used to block road, they're trying to move all of them, remove all of them. Nobody should block the road for tax collection.
But I just wanted to be sure that the states have, I think we have some protection now.
Yeah, we're trying to work with it, yes. So you can't force them. That's why.
Because in everything you said so far, I'm not saying that.
When we talk about state and
yes, that autonomy is still there, which is something that I'm afraid of.
so you have to go and remove it from the constitution, and they will fight to that. In fact, there are lawyers that's their own politics. I was in Lagos last week, and one senior advocate was telling me that removing fiscal autonomy is like killing Nigerians. It is a criminal offense punishable by.
So what happens when the state set their laws? You find out that start changing things. When the state that is conflict.
So it's not like that. So what we you can't do that easily to now. Now, we said it's by resident. If you work here, there are people that will work in the city center, believe in Maraba. No Maraba is Nassau State. The tax is paid to Nassau State, irrespective of where they are. In Lagos, people live in Norway, live in so it's not even Abeokuta, live in Norway, live in Agbado. Those are boundaries to Lagos. Their taxes are paid in Ogun State, not Lagos. But imagine that person working in Lekki. Before he gets to Ogun every day, it's probably like 8 or 9 p.m. He barely goes to bed and wake up by 4 a.m. He's back to Lagos State. But his tax is paid. He spends like 70% of his time in Lagos State, but his tax is paid to because we practice residence-based taxation.
Final question. So it's important to me personally. Now, what accountability framework links this new tax reform to government spending? Like, what framework our
Social contracts.
is
What you're asking is social
that
contracts.
there is
I don't know if you spend the
transparency
money.
in how they spend this money.
Okay.
The first thing I'll first say is, you cannot use the tax law to address governance issue. You know the issue, if I give you money now, if you are the leader, let's say we form association of people in this room. You now say everybody contributes money. The money you contribute, you will use it to do certain things. Now you now develop a law on how much people will contribute, when they will contribute it, where they will contribute it to. You know, it does not, that law will not talk about how you spend it. So the tax law does not tell government how to spend money. Because it's the citizen that tells government, that appoints government and what to do. The constitution does that, governance. However, what the tax law is only saying is that government starts also becoming transparent in how you report. Give people be able to report this money. And if you look at most every month, there is a reporting for FAC, the federal account allocation. So money that the NRS collect, and they take this to FAC and they distribute it on monthly basis to states. So now federal government is now telling you the money we collected on your behalf, see those we gave it to state and local government. And that is where the highest number of lack of governance is not the one for federal. The one for federal, many times you see things that federal government, you may not see what states do. I think you see our notes in Abuja. You can say federal government is doing something with the money. But there are places that you don't even see any examples of
What is there in the constitution that actually protects the rights of
so what will the constitution see?
from the hands of this government?
So what tell me what the constitution will say?
But
No. Tell me what it will say. Because you are talking about spending. Now they will tell you that because when you appoint somebody as your leader, you have given the person your part of your grade, but to think well, part of the power. Now they are supposed to now say, okay, what you need is that you need good road. What you need water. So they can tell you that, oh, what you need is social services, and we have done school feeding program. So those are the things. Now it's a governance issue. So I'm thinking of how it will be coined.
I don't know how it will be going. I think more energy should be.
And you know what you are saying also is a bit subjective. Some people may believe otherwise.
Those that don't want.
You know, if you are part of the contract, if you are receiving contract, you say government company. If you are the one reading these rules, if you are the one republishing the airports, if you are the one supplying the bus for the mass transit, if you are the one, people report that is well. But when people say government have done nothing too, I always disagree with them. Because many of us have civil servants, they have paid salaries. There are some, when government have not done, just say government. Based on your. The last part is office.
Yes.
How much is government collect? You know that. How much? No. Because before you say the last part is office, you also know how to be able to justify by how much government.
I'm judging it from the potential of the
Potential.
country,
Yeah.
the resources that we have, the wealth of resources we have, and the
How
level of
much?
the borrowing and things. Yeah, I mean,
I understand. So when you know that you have from tax. You have from tax to resources. You can say God has not managed resources well. So Yeah, I used to tell people to manage and judge our participation. That's what I'm talking about. It's those of us who wear suits, wear gown like this, only of us that pay these taxes.
Let's see what I've got.
I bet people who wear the band down. When you go to the market, many people that do self-employment don't pay taxes. See, many people self-employment don't pay taxes. Many of people are earning, I know people who earn an average of $25,000 from YouTube every month. Some don't pay, many of them don't pay tax. Until recently, that we appoint some of them to be responsible for closing tax from that period. Until recently, the government has appointed good lot of them. And when you're paying Nigerians, deduct this amount. Or when you're selling, charge VAT. When of them don't pay tax.
It's a collect of the government, right?
Yes. Huh?
Those platforms, right?
Yes, because yes, they will collect VAT and collect the withholding tax. And the problem is that if it's withholding tax and it's an individual, they can't, it's difficult. So to now to determine the state of residence of that individual. So I think they don't do withholding tax, they do only VAT. They do only VAT now. So some states are trying to mandate them. The state don't have the power to mandate non-resident.
It can be assessed to the individual's team. That's the reality.
States cannot mandate them. So what we have done is to ask states. What we are now done is that there's a provision in the law because it's only NRS that can mandate non-resident to do anything. So the law says we have a provision for assistance in collection. So the states can come to NRS, help us collect taxes from non-resident that pays our people. So it's around. So businesses that adapt early will not only remain compliant, they will become more competitive, investable, and resilient in Nigeria's evolving fiscal landscape. And so thank you very much for listening to me. Please, I hope, okay, go.
Like 2025 transactions. If they review this new tax law.
This is so there's one question I used to. I will also ask you the same question. If you committed an offense in 2025, and let's say someone, not you now, they said drug peddling is liable to death penalty in 2025. And that somebody peddled drug in 2025. And unfortunately, it was caught. Let's say it was caught. And it's undergoing trial. And 2026, they have changed the law as to now be life imprisonment. Let's say it was death penalty in 2025. And the judge wants to now, they've concluded the investigation and they want to sentence. They want to now pass judgment. Which judgment do you think they should pass? Is it death or is that imprisonment?
No one.
Which one?
Because it's favorable.
That happens in 2025.
Because that one is favorable.
Because it is favorable. Because this new law also favors some people.
But sir, you can also.
It favors many people.
Also
In fact, it favors some people. When it don't favor people, it's penalty.
Sir, our answer will change now. Not that the death sentence was recently, then
You will say they should use the old. You don't want it. The law that has been repealed, it's no longer exists. Because there's no law again. That law is no longer existing. So I'm giving you an opinion. So people argue. They'll tell you that you cannot apply the law in retrospect. That's what they say. And you know one thing, let me answer your question on specifically 2025 transactions. Where was okay, as a company, are you due, is your tax due? The tax was not due, so you do not have tax to pay, even if you were carrying out transactions. You might have made a loss, so there's no tax. So if you make a loss, should we say you should pay more tax? Huh?
That's.
So but you can say, if we say we want to apply that 25 law, and we should pay the more tax.
Yeah, I agree.
So one thing again, so this thing happened when we transmitted the Finance Act. The Finance Act exempts companies to 25 billion $21. So that year, many of them did. And there was a new provision that says companies with foreign equity, before it used to be 25, we now abolish that one. You pay minimum tax. Because if you have foreign equity of over 5%, you don't pay minimum tax. So what people do is that they move their company. They go and open one small company in Kotonou. All those people are close. And say they loan the Nigerian company. And so they up to social amount. They say, so we have foreign equity in Kotonou there. And so they say, there's a particular bank that's so they don't pay minimum tax. And every year they're running loss. You know, almost every bank in Nigeria is lost. When they declare profit, but when it comes to tax, it's lost. So those that the law does not favor said no, you must apply. Those that I feel say you apply the big law. So which one should pass the correct law? So they went to court. And the judge too ruled that they should apply the old law. And I said, whoever has gone to the court did not argue well. Because aside from the judge also has, there's something, aside from say it's a fact, you should also look at the impact of the law on the entire country. It's a fiscal policy, and it said it's meant to stimulate the economy. And government has given this concession. Because it does not favor one person, it does not make sure that people. So that's what I was thinking. Another person can argue about that. And I started with context. It depends on where you start. It depends on what you think about. So me, I'm giving you on the general. That's why I gave you those instances of benefit out. I gave you instances of minimum tax. I gave you those instances. One person, they're not people one person, I don't want to struggle. So I guess I've answered the question. Any other one? So I'm free now. So thank you very much for listening to me. And I believe I've added to your knowledge base. You can always reach me if you want to speak to me. Thank you very much.
Thank you. Thank you.